If you're running a law firm, the business entity structure you choose can really make it or break it for the growth of the firm. I'm going to go through the 4 business entity choices you have to run your law firm, and I'll wrap up with a super tax tip to save you tens of thousands of dollars in 2025. Let's get started. Number 1, sole proprietorship. Very easy to set up, flexible entity. You're basically up and running in a day, but you don't get the tax benefit most of the other structures will provide. Number 2, C corporation. I typically don't recommend C corporations for small law firms because of the double taxation impact. Number 3, S corporation structure. I love it for tax planning purposes. There's a lot of things you can do to reduce your liability with an S corporation. Number 4, LLP/LLC. The reason I'm saying /LLC is because certain states, such as California, does not allow law firms to run their firm through an LLC. So you would have to use an LLP. It gets taxed exactly the same way as a partnership. It's great, flexible entity, but it does unfortunately not give you the tax benefit an S corporation would do. What we do to get the flexibility of the partnership structure, LLP/LLC, and the S corporation, is that we put an S corporation in between the partnership on the top and the individual partners in between, so that you get the best out of the 2 worlds, flexibility and tax savings. That's the one that I typically recommend for multi-partner law firms. Let's wrap up with the super tax tip I promised you. This year, 2025, is the last year you can implement the pass-through entity tax deduction if you plan it correctly. Make sure you do it, because you would otherwise leave tens of thousands of dollars on the table. If you have questions about anything I talked about, just DM me directly, and I'm more than happy to answer any questions you have. I look forward to talking to you soon.